Welcome, and thank you so much for clicking on my video. I appreciate you being here, and thank you so much. We are so thankful after Thanksgiving, but now we go right into December, which means my wife's immediately redecorating the whole place. And she got a little stressed yesterday, so I couldn't put out a video. But Patreon members, you're always going to get those daily expected moves. But for today, I got to get all you guys out there on YouTube some daily expected moves for tomorrow, and we got to talk about what's going on in here. But the first thing I wanted to do was go over a few other things before we get started on the SPY and the QQQs. Actually, I wanted to go into a few things to show you how December could be building up to be a big trap. Even though I do see a new all-time high coming, I do think that that new all-time high could be a pretty good trap for a correction going on into early 2026. So I'm going to go over that first, and then we're going to get into those daily expected moves. Thank you again for clicking, and let's get into it. The first few subjects that I want to get into actually involve the dollar. I think the dollar is a good indicator of potential investment going into cash, investors going more into cash, especially the big players going into cash versus actually holding assets. We're going into assets. So what I wanted to watch here was just the weekly chart. And this is overall going to be a bigger scheme thing. And we're going to maybe go over this weekend to be a little more clear. So let this be an opportunity for you to subscribe. But you can see that we're at the kind of the bottom side of this channel with the weekly expected move. Now, the last time that we were at this channel, and like I said, I don't want to go too far. I think we'll go more into it over the weekend. But last time we were at this area, we did create that double bottom. We actually created a double bottom. You can see that with the divergence down there on your RSI. You can see that with the divergence on your MACD, very slight there. Very nice to see. Now, we'll notice that we were at deeper levels as of right now as we tag that. And we did mention the daily higher low. If you remember just a few months ago, we were mentioning a daily higher low, mentioning the fact that we could see some kind of daily higher low, daily divergence to get a weekly move from the dollar. Now, this has gone up to the center line. So something interesting here is I was talking about the market potentially going higher, and it looks like we've curled up on the daily MACD. We're going to go into those things in a moment, but if the dollar is actually going to turn down here, why wouldn't it come down and make some kind of higher low, some kind of divergence, and see a few weeks of falling off? That would encourage us that people are going out of the dollar for a short period of time and potentially going into assets, which does partially add some credibility to the SPY actually going a little bit higher, but I doubt that it loses this overall area, and I think that we will see the dollar curl back up eventually, but it does look like that, and we will go deeper to show you guys some signals that told us or tell you, as someone who analyzes stocks as well, when you understand these things deeper, you can really start to understand how bigger timeframes or shorter timeframes can affect bigger ones. So the dollar for right now, we're going to go over this signal that is right here on your screen. I'm sure a lot of you can see it for yourself right now, but we are going to go over that on Saturday when we go into the bigger picture. Going back out to the weekly chart, I think it's important to keep an eye on what? I think it's important to keep an eye on the 10-year yield. Now, I just mainly wanted to talk about a few of these topics, but as it stands, we were looking for the 10-year yield to see some kind of pop here. Now, if this goes way up to the sky, that's going to be a big issue, and I don't think that our leaders, our market makers, our financial people, anyone like that, the Fed, they don't want to see this thing sky through the roof. I mean, it's just going to completely send us into a depression. So what most likely could be happening here is what the MACD is kind of suggesting. So the MACD suggests, sorry about that. The MACD here is overall suggesting that we could see a curl up. It is. And as we go into the daily chart on Saturday, we're gonna go over why that could happen, and we're gonna see what happens over the next few sessions, see if anything changes. But if this is able to curl up, that means the market's probably not going to celebrate that at this point, or we're going through hyperinflation, which both of those scenarios kind of end very badly for the market. They overall would at least end in a correction, if not some kind of, crash for a moment. But the MACD here is suggesting that any upward move is likely to roll. So I did want to point that out. The weekly MACD is pretty low as of right now. From these areas, you would look for a potential lower high. We haven't broke critical levels. We haven't broke critical levels for these readings. But as of right now, that would be, oh, is the 10-year yield going to get going? And then is the Fed going to do something to really clamp down on it? That's how I would overall view yields. But for now, we're going to go into the daily chart on Saturday so we can really see if this thing has a good shot to turn up. And I'm sure a lot of you can go over to this chart right now and analyze this yourself and understand what we are going to talk about come Saturday. Now, the last thing that I wanted to bring up here was another weekly chart, and that would just be for volatility. And this is where we're going to get into our regular stuff, at least a piece of it. Okay, so if we are going to see a little bit of time of positivity, maybe for a few weeks in December, well, that would be enough time for this weekly MACD to curl down for volatility. Now, that could potentially take out these low levels, which would mean that we're going into a period of greed for a moment. You notice that Monday, December 29th, could be a big day to pay attention because that could be a day where things start to turn around. So I would just be watching out. And these are overall ways that you can see, hey, am I getting some inclination? Am I getting some hints that there is some kind of massive bull trap, something that is more like a end of year bull trap before a correction? I would be looking for these things. I would be looking for a potential divergence or high or low from the dollar. I'd be looking for the 10-year to go up and set a lower high. And I'd be really paying attention, especially for your trades, to the VIX on the weekly chart, especially if it makes a divergence. That divergence most likely will be for a corrective move, in my opinion, because that will not be a divergence on the MACD and RSI at the same time, at least for the most likely. The way that it's shaping up, it won't be like that in the most likely scenario. So we'll still pay attention to it. I'll update you on these things as they come to fruition. But as of right now, I think we need to get into the actual SPY. These are just some thoughts to have in your head as far as this run right now and what we're doing in September. What is the actual goal for the big money right now for December? And I think that could potentially be set a massive trap for some kind of correction that could take some time in 2026. So I wanted to bring up this information, and now we're going to get you those daily expected moves so you can be prepared for tomorrow, and we're going to talk about them. Now, we can see from the weekly perspective, which we're going to go over this again, we could be doing what? We could be making those little waves, right? Those little waves. We still probably have some time left. What I'm talking about in 2026 is getting that corrective move that maybe is a good corrective move for a period of time, but we end up seeing one more push to the upside. Now, I know that's crazy to think about, but we have so much room here that we have to see how this shapes up over time. So I really wanted to bring that up, and we'll talk a little bit about that this weekend. As far as the daily scale goes, you have confirmed up into what? Positive territory, which means you are, as of right now, trying to test this high up here and do what? You are going to attempt to make a new one if you're able to break through that high. So we need to do our work in the shorter time frame. So let's go into the 2-hour chart first. Hopefully you have the weekly expected moves. Hopefully you have updated monthly expected moves. If not, then you might want to go view the video from the weekend where we give out all of that information. But we do see here the weekly expected move upside could become important today. We do see a confirmation. I wanted to talk about that first. The confirmation that we do see here is at the end of the day. So if you do follow 2-hour charts, overall, you want to really take the last bar of the day with a grain of salt because it will just be like a 30-minute bar. So you really want to pay attention, and the 30 minutes is going to be very important today. But as that has crossed over, I think we do have the opportunity to reject. As of right now, what are we doing? We're piling up, piling up, piling up, which means what for the SPY? Most likely a big move is coming very, very soon, if not tomorrow. So we'll be paying attention to that in the 30-minute chart. So the 685.87 to the upside, going to be an important level for tomorrow, your 68% zone for tomorrow. And you see 677.19 to the downside. These red lines are your daily expected move. The purple is going to be the weekly. We still have that gap down there. It would not surprise me at all. I actually would enjoy it if we got a little freak out. The 2-hour comes down even past that weekly expected move, and then we catch that on the way up. Because this MACD is so positive, anyone that is out there talking about a roll, talking about a bull trap right now, notice that I'm talking about a bull trap maybe towards the end of December. We don't see any signs of any kind of bull trap right now as it stands. We do see potential for a pullback where if you were part of this run, you might want to take it off the gas and then, hey, if this curls up, reapply it. But for now, you would say 2-hour pullbacks would be met with buyer demand. And we actually see that from the 30-minute chart as well. So as the 30-minute has gone across here, pulled back with time, this is a pullback, just so you are aware. As of right now, you could consider this a pullback. And if you are able to break to the upside, you could see a little run to where that weekly expected move. Tomorrow, it would be suggested to pay attention to 685.87, though. This would mean that if there was going to be a, say, quote unquote, bull trap where the 2 hour would confirm down, you might look for a little 30-minute divergence to confirm in these areas. That means that we could see a little shape like this going on tomorrow. But this all hangs on, does the 30-minute confirm into positive territory, or are we going to distribute this to the downside? Are we building liquidity to push it down to then buy it back up, or are we building liquidity for the next upward leg? Because truth be told, you don't even need that 2 hour pullback anymore if you're just moving sideways. So this is just stuff I wanted to bring up. As far as the bear side goes, I don't see a really big bearish take. I do see pullbacks. A 2 hour pullback can happen. A 30-minute pullback with time is happening right now. We can see a break to the downside. And as we, overall built liquidity here, we can head down to that weekly expected move. But I think the Qs here are actually more interesting in saying somewhat of a story as far as a potential small trap for a pullback right now. So there could be a bull trap right now for a pullback, but that is purely just based on the Qs and their type of price action and how their MACD and RSI do look. So when you come over to the Qs, you see 627.19, you see 616.91. Once again, not seeing anything trap worthy on the SPY. Seeing some things that are trap worthy on the Qs. That's perfectly fine. Overall, we are above that 5-day moving average. That means bullish plays are going to be much easier. I wouldn't be banking on some kind of stock market crash after this big ass rally. That's what I would say. And we've taken out those critical levels we wanted to take out pretty cleanly. We can come down and grab from those areas all we want. Pay attention to your weekly expected move. So as of right now, we would say it like this. What do we see on our MACD? We see that 30-minute divergence, very wonky, very squeezy, triple divergence here on the RSI, very squeezy. So this is not something where it's like, yay, I'm going to be really excited to bet against a market that is crossing up on the daily scale into positive territory. Hey, if you're good at it, you're good at scalping, you're good at doing those things, I understand, but everyone trades differently. And if I was going to short a market, it would be when the downtrend is going to begin at the end, maybe at the end of December, we'll see something interesting. For now, these signals do suggest that we can see a 2-hour pullback with confirmation. We have not seen the 30-minute give a solid confirming bar. And when we do get that confirming bar, it's been met with that buyer demand immediately. So overall, this means the 2-hour can extend further. We can extend further, and this would be actually invited by someone like myself. And now we're going to talk about the potential first trap that the Qs really could set that I think would be interesting. Take it with a grain of salt, but I did say that we need to take out this level to potentially create structure. If we haven't done that yet, so if we're able to take out that level and see this gap filled, then we roll. The bears could get nice and excited. Then we could see this climb back to the upside, maybe going on into the end of December with a potential head and shoulders. I know that that would be crazy, but it is the shape that looks very interesting to me, and it is something I'm paying attention to. As we could see kind of a euphoric boom up to this level, we get a 2-hour just pullback overall to make a right shoulder. I think that would be very interesting. Overall, going into tomorrow, you just go, hey, we're squeezing to the upside. Eventually, this thing will pull back and give you a bullish opportunity, and bullish opportunities in this market are going to be much easier because you are in positive territory. So if you just see a curl up, it's a pretty good idea that we are going to new all-time highs. Now, that's dependent on a lot of things, and one of those things is volatility not going to pop off. Now, I'm still kind of looking for that one moment where it gives that lower high, but as of right now, I'm interested to see if we actually see the 2-hour curl down, or if we get a rejection right here would be very interesting, because as of right now, the 2-hour looks like the 30-minute. This is maybe something to react to, especially if you're someone who trades or watches things overnight and you can move your money around. If you're doing ES or anything like that, you can watch this towards 2 a.m. Central Time, and you can see if this is popping off. Now, if this pops off, that means that the 2-hour is most likely going to see an upward move, and this could be a rejection as it gets closer to the center line. So you could be just a day or so away from a retest of the 5 and failure, but that's most likely all this would be. Where you would want to be more worried about volatility fully turning up would be if the daily scale is able to turn up, and you just don't have confident signals as of right now to call that. It's always a possibility to happen in the next few days, but you would look for hints before, and we just don't see many of those hints. You have tiny little divergences, and you have 30-minute obvious divergences here, where if it would confirm, it would justify a reaction. But as of right now, it really just looks like, hey, the whatever kind of pop we do see, we've taken out lows, any pop we see should overall subside. So just make sure to keep that in mind, but pay attention in case you are overall wrong. That's overall how we do things here. We like to make a plan, go with what's very, very probable, have those reasons to take a trade, have a reason to risk some kind of money behind this. And as of right now, I think that the interesting thing would be, does the 30-minute curl up by the center line and just give a very simple swing? And does that very simple swing take you to what? Take you to 692.47, where people could get euphoric. And then do we actually see that subside and get some kind of 2-hour pullback? So that's what we'll be watching over the next few sessions. I hope that this information was overall helpful for you, and I hope you have a great rest of your day. All right, guys, peace out.